now let's get into some of the reports themselves. So generally speaking, a press release will give highlighted points of some description before the release begins, as we have seen already with NVIDIA. This is because investors, analysts, journalists have a limited time, so a press release enables them to pass through the information quickly. This also means that companies can better control the narrative. So obviously when they highlight things that they want you to see at the very top. And even in the body of the press release, they'll highlight things that they want to stress. Okay. So sometimes companies will highlight points in greater detail than others. So as we saw with NVIDIA report, there's only 2 highlighted points. Here we have many more. And that can vary from company to company. As I said, these sometimes can look quite different. So with JP Chase, we have a lot of bullet points on the side. Okay, so why do companies highlight different things? Well, I guess that is because different companies have different pressures. They're in different industries, they're regulated differently, and they're doing different things. So a bank highlights lots of different metrics because banks have deposits, loans, fees, and lots of big banks, especially like JP Chase, have investment banking lines, they have loan lines, they have corporate loans, personal loans. They have many different things many different business lines they're operating, and they are all financial lines, so they all have different metrics and different numbers. So it's not surprising that one of these big banks has a lot of highlighted points. An energy company, and indeed anything in a kind of manufacturing sector, may well highlight production figures. So as we'll see with ExxonMobil, they highlight their actual production figures, like the number of barrels of oil that they're producing, or their offtake agreements. So energy companies, again, they have to show certain things to their shareholders and their investors, and it's not just the financial numbers. By the way, an offtake agreement is typically an energy agreement between 2 parties, an energy producer and an energy buyer, basically stipulating that the buyer of energy will buy this kind of energy and this amount of energy for over a particular period of time. So offtake agreements can last a number of years, sometimes up to like 30 years or more. And this is a very usual financial contract and how many contracts take place in the energy sector. Next, we have a tech company. So a tech company may highlight particular products and particular partnerships. Why? That's because a tech company needs to show that they have partnerships with other companies to show the sort of scale at which they're operating. We'll see this a little bit as we go down, and that they are not just selling products, but they're selling kind of new products that kind of embed into people's lifestyles, I guess, not just physical products like barrels of oil. So usually seen highlighted points, we have revenue, we have particular business lines, particular costs. So some companies might also emphasize the costs that are weighing down on them. If economic conditions generally becoming more difficult, they'll say that they're having, there are these new cost pressures on their business. Customer figures, this is also particularly important for tech companies because tech companies can stress how much they're growing. Tech companies normally have heavy amounts of debt. So if they say they have lots of customers, that means that they show promise for the future and that they can still deliver return for their investors. Stock performance, likewise, this is emphasized to instill confidence in shareholders and investors. Production figures, naturally, if the company is producing something, then they'll want to highlight that, how much their production is growing. Okay, so onto our first report, JP Chase. Just to mention, we're going to go through the highlighted points first of these reports, and then we're going to go through the quotes thereafter. So in this one, I mentioned that you're more likely to see more information with banks before. That's because they are heavily regulated businesses, they're watched closely by analysts, and they deal with a lot of money. So in this context, we're looking at a lot of different financial metrics. So we start with revenue, as I've said before, most companies start with this. Then we have credit costs, average loans up by X%, average deposits up by X%, average deposits down, credit card sales volume up. We have information about customers, we have information about investment banking fees. So banks generally have lots of different business lines. They have retail business line, a corporate business line, an investment business line, if they're an investment bank. Down here you can also see that AUM, so assets under management, are 3.9 trillion. AUM stands for assets under management. That means that how much money the company is essentially overseeing, because banks have investments in various different sectors and have access to various different pots of money. That's what assets under management means. So overall, JP Morgan is giving a snapshot of its business by giving figures of many different aspects of its business. We'll see in the quote section that there's less hyperbolic language used in JP Morgan's quote. I'm going to explain that later. So NVIDIA highlights certain business lines, notably data centers. The big thing that NVIDIA wants to highlight here is the use of its GPU, the GPU Hopper, in cloud computing services, and then it also makes several references to supercomputers, to how NVIDIA products will be used in supercomputers. It mentions SoftBank, enormous big Japanese company, investment company, and Denmark's sovereign AI supercomputer, which means the supercomputer the government is building. So here you can see how NVIDIA is stressing, after stressing how much revenue it's made in this sector, it's saying how these different products are being used across the world by private companies, by national governments. So it's kind of showing the expanse of how far its products are being used. Okay, next we have ExxonMobil. So here we have earnings as well as production figures. So you can see at the beginning, improved earnings from enterprise-wide transformation, third quarter earnings. So here we finally have the earnings figure, 8.6 billion. We don't know what that is up from in the bullet point, but that's okay. We'll explain that in the press release afterwards. We then have achieved highest liquids production in over 40 years with 3.2 million barrels per day. Okay, so liquids production in the case of ExxonMobil includes crude oil still. So here you have not only earnings, but you have production figures. Why? Because it's an oil company, it's an oil and gas company, and it needs to stress how much it's producing in as much as how much it's making. Next, we have share dividends. Oil companies tend to historically have given quite handsome dividends to shareholders. So that's clearly, and that's a reason why lots of people invest in oil companies, because they do give regular share dividends. So that's an important thing that they want to highlight. Then we have carbon capture offtake agreements. So carbon capture and storage development, this is, if you're interested, this is a new trend of lots of oil and gas companies, because they have some of the capacity to do this, that they'll capture the CO2 that is emitted from the production of oil and gas and then store it underground. And just on that point, publicly listed companies will tend to, in recent years, have tended to stress more of their ESG attributes. So if they're doing anything to do with carbon capture and storage, if they're building new renewable energy facilities, they'll stress this heavily in their press releases and earnings reports. Why? Because these companies are coming under an increasing amount of pressure to do so by their shareholders and investors. Although we'll see how that continues. And why do I say that? It's because at the time at which we're filming this, Trump has just signed an executive order restricting some of the money going to new renewable energy projects. So, and he also said in his inauguration speech that the famous phrase, drill baby drill. So we don't know how long this trend of ESG investment is going to continue. You know, that may be a trend that is consigned to history. We don't know yet. But for now, it's still important that investors, at least certain investors in certain sectors, stress how much ESG activism they're doing themselves. Okay.